We want to bring in Sylvia Jablonski, the CEO and Chief Investment Officer of Defiance ETFs. And for her economic perspective, we have Sarah House, who is Senior Economist for Wells Fargo Corporate and Investment Bank. And Sarah, let's start with you, just because the CPI and the PPI are the big numbers. Have we seen the worst of inflation?
I think we've seen the worst of inflation, but that doesn't mean we are done in this fight. So we're looking for another fairly strong print in terms of inflation's reading tomorrow. I think there's probably even some upside risks to our estimate as well as the consensus, given the revisions we saw midday Friday showed that inflation has a lot more momentum. And so I think overall we're looking at an inflation fight that is far from over.
Yeah, the BLS numbers, the revisions were kind of stunning. Just the idea that every inflation reading we've gotten has been underreported at this point. That does send a little bit of concern through things.
Yeah, so what we saw was that the momentum heading into this report was a lot stronger. So prior to the revisions, we were looking at roughly a 3% annualized rate over the past 3 months on core. Now we're looking at 4.3%. And so I think that does suggest that we still have a lot of breadth when it comes to inflation, and it's not going to be so quick to get back to 2%. So I think we saw a lot of optimism over the past 3 months inflation reports, but what we think is that you can extrapolate that improvement for that it is going to be a much more difficult fight than I think what we were looking at even just a couple weeks ago with the data in hand.
Sylvia, you are expecting a little more volatility, I guess we should call it. You had a really good line. You said it's a good thing the month of January is over, dry January. Why is that?
I think that January was a very positive month, right? You had a lot of short sale covering. You had a lot of momentum coming into the market. Investors were back in and the major indices rallied. So that was great. We all felt good. And then February started and sort of pulled us all back. And that's, the hangover we're going to get from dealing with that. But I think, what's going to happen here, or what's likely to happen is one of two things. I think if the inflation print is hotter than expected, then we'll get that continued volatility. That coupled with the hawkish Fed could potentially pull the market back. However, if the CPI number is okay, I think investors tend to tune out the Fed, look through and move forward, and the rally can kind of, keep on keeping on. So I think that this read has a lot to weigh on the market. But I also don't think it matters that much. Inflation is coming down. It might not be linear. This might be a hot read. So I really think we should sort of ignore it, but that's probably not what will happen.
Sylvia, I saw an interesting statistic that there were $31 billion in outflows of funds coming out of U.S. stock indexes and funds. That's the biggest we've seen in terms of a big pullout of funds since 2016. Is that just because the beginning of the year was so strong that last week a lot of people pulled money out thinking it's not going to get much better from here?
I think that a lot of investors took some opportunities to make some profits in the first part of the month and took some of that off the table. But again, I do think what was really interesting is you saw some of those dip buyers finally come in. And this week, I think if we get that pullback tomorrow, we might see some investors come off the sidelines and get back into a lot of those funds. We're actually seeing it on our side. We're seeing a good pickup in things like AI-related products and things like that. So some investors are actually coming back in.
So is that what you would advise people to do, too? If there is a pullback, if the inflation number is a little hotter than anticipated, that's a good time to jump in because, hey, the Fed's going to slow down at some point?
I would. The Fed is going to slow down at some point. Inflation is coming down. At some point, you have to start looking through. The average bear market last 14 months. We're arguably on month 15 from that, November 21 low. And I think that these are the times that you can really sort of gather wealth. But you have to have that 3 to 5 year time frame. If you're asking me about next month and, stay on the sidelines, it's too hard to tell. But if you have that 3 to 5 year time horizon, these are great opportunities to buy on the dip and set yourself up for future growth, particularly in tech. I mean, tech was really beat up. And I think that there's a shot to regain some momentum here, even though it's rallied into the year so far.